Hello listeners, I'm Aashay Choksey, Vice President Financial Sector Ratings at ICRA Limited, and through this podcast I'll be sharing our views on the banking sector. The performance of the banking system continues to remain satisfactory, with incremental credit expansion already touching Rs 15.5 trillion till early December, as against 18.2 trillion rupees recorded in financial year 23. Apart from this, asset quality levels and capital position for most banks remains at their best in recent years. Looking ahead, we expect credit growth to moderate from the 15 to 17% growth range seen for most part of this year to 12 to 13% in financial year 25, driven by a combination of factors including recent regulatory actions. On the earnings front, upward increase and repricing of the deposit base, as well as a downward pressure on lending yields amid possible cut in policy rates, would exert pressure on interest margins next year. Besides this, the fresh NPA generation for the banking system is expected to witness a relative increase in financial year 25 as portfolios gradually season. However, the headline asset quality metrics would maintain an improving trajectory on steady recoverability and credit growth. Accordingly, credit costs are estimated to remain benign and ROAs for the banks to remain at 1 to 1.2% in financial year 24 and financial year 25, despite margin pressures, which in turn should meet the growth needs for the sector. Besides this, banks are expected to continue to remain comfortably placed on capital and solvency in financial year 25 as well. Accordingly, we continue to maintain our positive outlook on the sector, although we remain watchful over any material weakening in asset quality levels and impact from regulatory changes. Thank you for listening and stay tuned for our upcoming podcasts.